In this video, we'll go over important price action fundamentals and rules that market follows so we can find a high probability setups. And first things first, we need to understand that the candlesticks on the chart are never alone on their own. They are always part of some sort of channel, pattern, trading range, or whatever. They're always part of some sort of geometrical pattern because market geometry is a real thing. Key levels and key entry points are always present on the chart. And when I'm looking at the structure like this, it is safe for us to tell that the structure is very bearish at this point. On exponential moving average is pointing down and price is below. So my goal is to find a channel that is going to contain this price action. So what I can do, I can either look for a channel like this from the first two swings, but it already has a break and the new extreme to move down. So what I'm going to do, I'm going to start from the swing that is a little bit lower, and I'm going to create a pattern like this. And this pattern fits really nice. You guys can see I have a double confirmation at the bottom and I have a triple confirmation off the top. This really shows that this structure is working nicely. Now I'm also going to draw the corrections as well, because there's a rule in price action that after price will break the trend line, traders will attempt to create new extreme. Now as you guys can see, there's the first break for the downtrend that has been pushing lower. There is a first break, so I naturally expect for price to create a new extreme before I start looking for reversal. So as I have this uptrend working higher, which I need to draw as well, I have a new extreme form right here, and this is where I start counting over because this is the highest high. I have a first attempt to go long, pull back below EMA, and a second attempt to go long. However, I cannot go long here. Why I cannot go long here just yet? Because this was the bigger and main pattern. Bigger pattern takes precedence, and this is just a shortened correction. So my goal is to wait for price to create a new extreme for the downtrend first. And you guys can see there's a new high, first entry long, second entry long failure. This second entry long, two-legged pullback worked for a scalp, but I'm not going to mark it as a high probability setup. High probability setup is this two-legged pullback at the key entry point under the right context. So the context here is not great. And as the second entry long fails, which is depicted to us by the bar in the opposite direction, this is now a failure. This is a failed second entry long. And you know that everybody went long here and got trapped. And they're probably panicking now because the market may reverse on them and their stops may get hit. And for that reason, this is the first high probability setup because you expect for a new low to be formed. This is the bigger pattern and it takes precedence. From that point on, market keeps pushing lower and keeps pushing lower. And you guys can see we are still below exponential moving average and our new low has just been formed. Okay, so I'm waiting and I'm expecting for EMA to tell me what's going to happen next. This was, by the way, right 1 minute before the news. So this was not safe to enter because this was right before the jobs news in the US. For that reason, there's this gigantic bearish bar. So you never want to risk the volatility throughout the news. But as the market is pushing lower, you guys can see we went into a trading range because there's a triple bottom and double top. And we are kind of swinging up and down. So you have to draw the key levels right here. And what I can see that the EMA keeps holding price. And this breakout area was tested. This is the breakout pullback pattern. You broke the breakout area and you never want to sell the breakout phase. You always want to sell the pullback phase right here for the market. So as the market is pushing lower, what I'm going to do, I can notice that this is a stronger bearish structure and I can find a larger pattern like this. This was the pattern that I was looking at the time because it fits nicely off the first two swings. Third swing confirmed it, and there are two micro touches at the same time. So this is confirming the bearish structure, and this is the lowest low, and this will be a first entry short, little pullback higher, and I expect trigger second entry short below this bearish bar, but there is no entry because price failed to trigger below this bar. So as the price is stalling and it's above EMA, unfortunately I cannot pull the trigger. If I'm selling in a downtrend, I want to sell below bearish bar. I cannot sell on a second entry below doji that is above EMA. So unfortunately, I have to let this go without me, even though EMA is holding and this support that now acts as a resistance is holding as well. So naturally, if I don't get a good second entry short, what do I expect? There is another setup that allows me to enter short. Yes, there is. There may be a lower high, and a lower high is forming right here. But take a look, there is no trigger, and a lower high here again. But there are two bullish bars, and I cannot sell below bullish bars once again. So I cannot go short at this particular time because I need to see a bearish bar. I need to see a confirmation of bearish momentum. At the same time, I can still see that the key level is holding price nicely. Trend line is coming to play and EMA is holding price as well. So this is you have 3 key entry points that are working together congruently. And look what you have: new high, first entry long, pullback, second entry long that failed. And also you have new low and you have a first entry short, second entry short. So the structure is bearish. 3 key entry points are holding price, and I expect for price to still keep pushing lower. Price is failing to push above EMA, which tells me that there's a lot of bearish momentum. This would be a great entry. This would be a high probability setup had the bar been a little bit smaller and this wasn't so congested. You can see that EMA is completely in the middle of those bars, which indicates congestion. A lot of overlap, and this bar is a little bit too big. You have to enter down at this stim right here. Had there been no stim and you have a little bit more room to this low, this is much safer. But for that reason, I'm going to mark it still, just as an example, because hopefully you understand the context that is going on here. This is where you want to sell. You want to sell at the corrections high, at the key entry point. You don't want to be chasing the market at these lows right here. Also, there's the first break for this downtrend. New low was formed. Okay, so I expect correction or straight up reversal, or EMA can hold price. But EMA is not holding price. You guys can see no rejection of price, completely blasting through like it's not even there. And this is a good indication that this new low is valid, that the downtrend is truly over, and I can be now looking for reversal, because this is a strong push up. And according to trend line rules, after there's a break and new extreme, I expect correction or reversal. So I'm drawing the short-term trend lines. There's a break, first leg to a new extreme, pullback, second leg to a new extreme, indicating a new high, indicating that the uptrend played out at least temporarily. So with that information that market is giving me, I know that I cannot go long here. I have a new high, first entry long, and I have, push below EMA, and I have a second entry long. This second entry long occurred below exponential moving average, which is not good. If I want to go long on a second entry high probability setup, EMA needs to hold price. It's not holding price. You push below, which indicates that the sellers are stronger. Also, I have this micro channel working lower, and this is a trap now. You trigger lower, reverse down, gorgeous bearish bar below EMA. You haven't moved too far. You're touching the trend line. 2 key entry points are holding, and this is the high probability setup, my first trade for the day. And I took this entry, and it was a great entry at this point on. This is the failed second entry long. Why? Because uptrend had a break and 2 legs to a new extreme, indicating that no longer bullish activity from the market. So what we are expecting now when we're looking at the market like this, we probably expect break of this downtrend, a new extreme to be formed. You expect second entry short, but what is the important thing here? Exponential moving average needs to be holding price. We'll see if that happens. It doesn't happen. And this is a huge change will happen right here, because once this formed, this gave me the inclination that there may be a channel working higher like this. So this was the channel that I drew, and I quickly prepared a snippet so you guys can believe me that once price pushed strongly above EMA right here, this told me that the second entry short is no longer safe at this point on, because EMA is supposed to hold price if I want to go short. So for that reason, I'm not going to mark it, nor do I consider this as a high probability setup, because context is changing. And it was a tricky area. So for that reason, I'm talking about it, because you have confluence of 2 key entry points. You have one downtrend and you have one uptrend. So I'm explaining why shorts are not safe here. Also, I'm just going to quickly adjust it. You have first entry short, second entry short, and you have a lower high setup right here. But if you're observing the trend line, this was a very important piece of information that happened, a strong bullish move. Similar pattern occurred right here. Well, I have a break, new extreme for the uptrend, and I have a strong push below EMA, which is indicating bearish momentum. And at this point on, I was expecting a failed second entry long. I want to go short, because according to trend line rules, I have a break, new extreme, so I want a reversal. But this second entry long, take a look what will happen. Strong bullish move above the exponential moving average. So something's wrong here. If I want to go short, this big bullish bar was not supposed to push above EMA, and I cannot sell below this failed second entry long, because price has indicating change in momentum. Same thing happened right here. If I want to go short, price has to stay below EMA, cannot indicate the change of momentum. So if anything, I can see the price is holding and I want to go long. Unfortunately, there is no long entry at this particular price area. So I have to just keep watching, and I have to just watch market go without me. Now, as the market is pushing higher like this, you guys can see The price is stalling around this key level. Now we have a double top right here and triple top right here. And also I have first big leg up, little pullback, and second leg up. So any second entry right now is going to be tricky. You're too high and you're too close to this resistance. Take a look. This is an uptrend day. There's a big move down and big move up. What happens on the left is important, and it will dictate what happens on the right. So if this was an uptrend on its own, you can be looking for longs, but since you are at this resistance right here, you have to be careful. So as the market is pushing lower, you have a second entry long, but it's below EMA. It's quite not touching the trend line. A downtrend is in play, but you just came off this resistance and you need to be careful. You have those two legs up and you definitely don't want to go long here. You have a first break of the downtrend. And now it's a little bit tricky because what is valid right now? Is the resistance valid, the trading range? So are you heading down, or is this uptrend valid and you expect a new extreme? And if you're not sure, you just sit on your hands and you do nothing. And this was exactly what I was doing. I was not sure what's going to happen here. There's a two-legged pullback, second entry short, but the bigger pattern is up. And I'm expecting for price to eventually push above EMA. So I'm just still sitting patiently. There is new low, first entry short, second entry short, big bullish move above EMA. This is indicating strong bullish momentum, and it confirms that the uptrend may be valid. We truly may get a new extreme form. This is good, but this bar is a little bit too big and a little bit hard to enter. Definitely, if you're an advanced trader, you can pull the trigger here. But take a look what happens. Market confirms the bullish momentum, pushes, and EMA holds price, and you have a high low confirmation of this reversal pattern. This is a great entry as exponential moving average is holding price, and you guys can see you're working to create new extreme, but the resistance keeps holding again. This is now a fourth touch of the resistance and a fifth touch of the resistance. Price is getting veggie and you cannot find enough room to go long into these highs. So there is no long just yet, and there is no short at the same time as well, because the structure is a little bit bullish. So at this point on, you're sitting on your hands patiently. When I was watching this, I was looking for a bigger pattern, and this was a little bit mistake, because this was a trading range with the move down and move up, and I should have treated it mainly as a shortened pattern. I put this bigger channel just in case we may get some bounce here at the lows. So just to treat it as a bullish bias. It never came into play. It was never correct, but mainly because it was a trading range. I was supposed to be patient, but take a look what happened. Move down, double bottom, strong push above EMA, and finally new extreme for this uptrend was being formed. So that tells you no more looking for longs. And take a look how this resistance still holds price. Numerous bounces of this resistance, which tells you that this is strong. You have a new high, first entry long, second entry long. Take a look, gap, you're far away from EMA, you're above the key level, so you're most likely the breakout is going to fail and the uptrend played out. No more looking for longs. In fact, this may be a great trap because you have room to the EMA and this channel is holding price. This is advanced entry, but the context here is really dictating that it's a decent short here at this point on. So the market is pushing lower, and this was unexpected. You don't expect such a sharp sell-off. So you have a second entry short, but you're going short into the support, so you cannot take this entry. And after this move down pushed, this is where, because you don't have the trend line yet, all you're watching this. And as you see price making its big move down, this is where you're going to draw a trend line like this. All right, you can potentially even draw a trend line like this, but that's not coming into play now. So you don't need this trend line yet. Okay, so since the structure is bearish, high probability setup is going to be a second entry, two-legged pullback at the key entry point. Notice how we're just looking for the two-legged pullback. That's all we are looking for, two-legged pullbacks or failed two-legged pullbacks in wrong context. Potentially higher lows or lower highs as a confirmation setup. So I have a break of the downtrend, I expect new extreme, and I have a first leg. Also break of the uptrend, new extreme form, second leg to new extreme, two legs up, two-legged pullback to key entry point to EMA. This is a second entry short, and this is a high probability setup. And take a look what happened. Market created a new extreme. So you expect correction or straight up reversal. You have a break of uptrend, new extreme. However, there's a new low, first entry short that failed, and a second entry short that failed. So you cannot go long here. Then you have a push above EMA that's a little bit choppy, and a third entry short that failed, which is not a setup. This would have worked for a scalp, but still it's a little bit too early to go long because the downtrend was quite steep and you probably will not reverse the downtrend so quickly. So we're mostly chopping here. If this was a legit 2 legs and second entry that failed, you can make a case, but since it's a third entry, which is not a setup, you don't want to go long here. Market is chopping in the middle of this trading range. You have a double top, you have a push below EMA indicating bearish momentum, and you have a lower high, which confirms the double top and is below EMA. This would have been a great entry had it closed a little bit more bearish. Why? Because there's a break at a new extreme. And just like always, you expect correction or straight up reversal. However, price is failing to push above EMA. Twice you push below. So indicating no reversal and resumption of a trend. But this bar is horrible. No short right here. You guys can see you have a micro break, new extreme, little failed breakout below the trading range. And what does the market tells us about breakouts out of trading ranges? Most breakouts of trading ranges will fail. So we anticipate for this breakout to fail. And if anything, it may be tempting to go long here. New low, lowest low of this entire swing. There's the first entry short, pullback, second entry short, failure. Had this closed above EMA and had this been a nice bullish bar above exponential moving average, this would have been a great reversal pattern because you have a break, multiple legs to a new extreme, you're in a trading range and you come from the failed breakout. No safe entry at this point on. And by the way, let's talk about the trend lines a little bit because you can make a case for drawing a trend line like this, but is this valid? It's particularly not valid. Take a look how there's so much room in this channel. This really, channels need to, your price needs to fit neatly inside of these channels. And this is too flat. This channel almost acts the same as a trading range. And these flat channels are not correct because it's almost as flat as a trading range. On the other hand, you can make a case for drawing a channel like this. And this is not particularly helpful and useful as well. Price action doesn't really work like that because why in this instance? This channel is way too steep. It's almost as steep as the initial trend line. So just stick to the main trend line. This is not a spike and a channel pattern. Spike and a channel pattern looks slightly different. Okay, so as the market is pushing higher, structure is changing. Okay, you guys can see EMA points up. Trend line is working. So this is easy price action. What do you expect? Two-legged pullback. Second entry long at the key entry point. You get a second entry long, but it's far away from key entry point, so you're not taking. And you get a new high, first entry long, pullback, second entry long. I cannot go long above bearish bar. I cannot go long above doji, and for that reason, you have third bar that is nice. But since the second entry long triggered above bearish bar, I didn't really like going long. Looking back, it doesn't look that bad. So because this is the first break of the uptrend. So according to rules, you expect new extreme to be formed. But really, these two bars really kind of messed the situation right here. But this is a pullback to the key entry point and you expect new extreme to be formed. And what do you expect now? Correction or reversal? Big bearish move down like we talked about. I expect reversal. First entry long, failed. Second entry long. We talked about the situation when market indicating unnatural activity, big bullish momentum. I cannot go short here. Also, the resistance is quite strong, support is quite holding, but had this bar closed below EMA and the bullish bar didn't manage to close above, I'm shorting here. So it didn't happen. I sit on my hands. If I don't see the pattern, I sit on my hands. I cannot manufacture a story for taking this trade. It didn't set up the way I wanted. It didn't set up the way I follow the rules and follow my plan. So for that reason, I cannot force it, even though I want to force it. So I'm just sitting here patiently, drawing the short-term trend lines. Resistance is here, still coming to play. So I'm a little bit careful here. I have a new high, first entry long, pullback, second entry long. Two legs down. So this is the two-legged pullback to key entry point, second entry long. I forgot to so this is the second entry long, big bullish bar, quick, easy scalp. You have enough room to do resistance for a quick, easy scalp. Okay, this is a high probability setup. New high for the short-term uptrend was formed as well. So right now you're playing this as a trading range because you have a micro double top, EMA is flattening, you're swinging up and down, and market push higher. And I took this trade right here, and this was a little bit risky, and I got lucky here. You guys can see I treated it as a failed breakout. I treated it as a first leg to a new extreme, kind of like a second leg to a new extreme. I respected the resistance. But if I take a look at the overall trend that has been pushing higher, why did I sold here? Basically for the same reason right here. You have a downtrend, you have a break, new low, and you have a consolidation, and you have a failed breakout at the bottom that reverse market. Same thing to the upside. Uptrend, break new high that went into consolidation, and for that reason I thought we're going to push back at least to this support, barely scalped out, got a little bit lucky, and market reverse higher. So when I see this, I cannot argue with the market. And take a look, market keeps pushing higher. I cannot no longer fade the breakout. This is a bullish structure. This breakout was supposed to work, and as the market keeps pushing higher, EMA is pointing higher. That's where I'm going to find a bigger pattern, because you cannot just use the short-term trend lines while the market is pushing higher and higher. This tells you that the bullish activity is strong and you have to find a bigger pattern. Look how nicely it fits off the highs. So now I'm strictly thinking always in long, and I'm looking for high probability setup, two-legged pullback, new high, first entry long, pullback, second entry long at the key entry point, small little bullish bar, EMA holds price, high probability setup. You expect new high for the uptrend. Look what you have. New high forms, so you reset the count here. You always reset the count from the highest point. You have a first entry long, but it's only first entry. You're waiting. It worked because it was also felt second entry short from this low. But since I have just break a new high and I'm coming from the upper side of the channel, we may correct a little bit. So I'm being patient. And we have a first entry long, second entry long. Once again, this was the two-legged pullback to key entry point, and this is once again two-legged pullback to key entry point, not just one, not just EMA, but the quadruple bottom or the triple bottom right here. Take a look how price is holding. This is clearly a bullish trend. So I only think about reasons to go long. I only think about, I'm letting the correction play out. And I have a first entry long, second entry long, big bullish bar, which confirms the bullish momentum. This is my last trade for the day. My runner unfortunately got stopped because I ended with the limit order, got a scalp, and this bar came back, I think, to the very tick probably. It got my runner and it instantly reversed. So no runner for me, but the runner probably would have still got taken out at this point on. We have another second entry long right here, but I'm not going to mark it because we just came from the last push. This kind of feels like a depletion move, exhaustion. There's a two-legged pullback, but the downtrend is in play and I need to respect the downtrend. So this bar is so small that it's probably worth taking a chance here because this is strong bullish structure. So your odds are really high that you're going to make the scalp. But you know, I respect the trend line, so I recommend waiting. Now price is just stacking, overlapping, and stims. I'm going to draw the trend line and take a look. We actually just have a first entry long right here. First entry long, little pullback, second entry long right here, but you just broke the trend line and you're below EMA, so you cannot go long at this point on. You're just waiting. And what you're going to do you expect for market to go down? No, because this is the first break for the uptrend. So you expect new extreme to be formed. So what you do, you just let the correction play out and you expect felt second entry short above EMA. We may not get it. There may be a downtrend that may start, but odds are high that we're going to get a retest of this uptrend. And I have a first entry short, push above EMA confirming bullish momentum, second entry short, failure. Bullish bar, EMA holds price, trend line holds price. I expect new extreme, multiple reasons for context to go long, and take a look, market is pushing higher. What happened here? New extreme form, so that indicates time for correction. I cannot go long right here. That's why if you just take any two-legged pullback and you don't even think about the context, you will not have such a great win percentage as you can if you just think about the context. With the break and a new extreme, you cannot go long just yet so quickly after break. No, market needs to correct. So there's a two-legged pullback at the EMA, but it happened just after break. This is too early. You cannot go long just yet. You don't want to sell. You're just waiting for the correction play out. Looks like the correction played out with the push above EMA. I have a correction and I have a higher low. So now I have 3 legs down, push above EMA, and EMA holds price, and I have a higher low. So this tells me that the uptrend is now resuming. We didn't push below EMA, downtrend didn't start, and this is now high low, high probability setup. There's a felt second entry short, but the bar is too big. You're going long at the very highs, and price is not touching EMA. Price is working higher, You're drawing the trend lines, and what do you think about now? Are you thinking about selling or buying? You're still thinking about letting the correction play out, and if you get nice long opportunity, you're going to buy. So you have a break, new low form, you actually have a second entry long, but this bar is a little bit too big. You get a high low confirmation. Similar pattern to this. Had this bar closed a little bit bullish, great entry. It still worked, but it didn't close bullish enough for you to take the entry. And now we're reversing lower as the market has just closed, and there is a nice downtrend, kind of like a spike and channel pattern that is being developed. But I want to talk about the structure that was today, because we had twice in a row, today and yesterday. The day was a trading range and it was hard to find entries, but at the later part of the day there was a downtrend or uptrend that gave you a lot of easy setups. And it's really important to understand that you don't have to analyze every single structure on the chart perfectly. It's completely okay to not know what's happening in the markets, because your job is to wait just for the high probability setups. So as the price is swinging up and down, EMA is flat and it's hard to tell what's going on here, what's going on here, what's going on here. Take a look what happened. Price broke to the upside, it gave you nice bullish structure, so you don't have to even think about selling. Only thing you think about is longs, and there are about two-legged pullback, two-legged pullback, two-legged pullback, failed second entry short, high low. These are easy high probability setups that you can catch runners on, and this is the easy trading that you need to be waiting for, so you don't have to force entries throughout this. And unfortunately, it just so happens that you just get the best entries at the very end of part of the day. And I know a lot of times you're working, or you have to go to school, or you have other things that you have to fulfill, so you don't have entire day to sit here. But just something to think about, that your job is not to force entry on every single market, because there are going to be instances where you will be just completely clueless, and that's completely fine. But market will become, there are always those easy trades, there are always a couple of those easy trades, and if you wait for them, you're going to be rewarded. So I hope the video was educational, helpful, and I'm gonna see you guys in the next one. Press the like button and subscribe to the channel if you haven't. Take care, buddy.